welcome on board Mr. Umesh Chowdhary, the Vice Chairman and Managing Director at Titagarh Rail Systems as well. Mr. Chowdhary, hi, good to have you on the show. Recently you've bagged quite a few orders right from the Surat Metro Rail project, etc. as well. Talk to me about what kind of revenue accretion will happen, what are the margins on this one, when will the execution start?
Sure. Yes. Good afternoon. Thank you for having me with you. We won the Surat and the Ahmedabad metro contracts recently. We signed the contracts very recently, and this is in continuation with our first metro project that we did for, or we are continuing to do for Pune, which is almost 60% already executed. The rest will be executed during this fiscal, and thereafter followed by Bangalore through CRRC, and this is the first direct stainless steel metro contract that we've got. So with this contract, we would have had both the stainless steel and the aluminium metro contracts on a direct supply basis. According to the agreement, we have to make the prototype train in about 1 year and 3 months, about 14-15 months, and we should be able to be on schedule. In terms of revenue, we've been now clocking on an average about 900 to 1,000 crore per quarter in revenue, and we have a strong order book of almost 27,000 crores. So there is a good visibility, and we are looking at ramping up our production even further.
Okay, so that's a very strong order book of around 37,000 odd crores.
27.
Okay, fair enough, I stand corrected. But since you're ramping up your capacity as well, talk to me what would be the per month capability going forward and when will it come on board?
So we operate in two verticals. One is the freight rolling stock, where we are now producing at the rate of around 700 wagons a month, which within this financial year, we will ramp it up to about 1,000 wagons per month. That's about 12,000 freight wagons a year. And in the passenger rail systems, we are setting up a separate line for the Vande Bharat, and we are already doing the Pune. So from a historical production, let's say till now, which is just about a train a month or 3 or 4 cars per month, the target over the next 4 years is to reach almost 70 cars per month. Of course, this is going to happen in a gradual manner. But then, from next year itself, the increase in production and productivity will start getting reflected.
Okay, point taken. You talked about your run rate in the revenue being around 900 to 1,000 crore per quarter. Given the kind of order visibility do you plan to be at a number closer to, let's say, 7,000 crore for next year? Because the way you're talking about the ramp up in terms of capacity and order visibility, 7,000 crore should be achievable next year, right?
So we, as a policy, do not give any forward-looking guidances. But in terms of course, if you look at our revenue split in the last few quarters, about 80% or 85% has been from the freight rolling stock, and very little from the passenger rolling stock. And passenger rolling stock is something that will really start contributing now, because we have a large order book with the Vande Bharat, with the metro contracts and all of that, which will start production effectively from 2025 and then mainly from 2026. So on one side, when we will grow the freight rolling stock production from 700 to 1,000, and on the other side, the passenger starts contributing. So definitely we would look at revenue growth, but I would not like to name a number to this and quantify that at this point of time.
Sure, I appreciate that. But talk to me about the split of private versus public in terms of the order book, and what kind of margin differential do the two hold?
So, we continue to maintain our leadership on the private sector wagon space as well. We have the largest order book in the private sector wagon ordering. The margins of any contract is on a risk basis. So private sector orders are always they normally have a higher margin because they they carry a little bit of a higher risk. The railway orders come with a price variation clause, so the commodity price movement is actually hedged, whereas a private sector order, you carry the risk of the commodity price. So there is a differential about 2 to 3% on EBITDA levels if everything remains fine. But in case there is a sharp increase on commodity pricing, then the private sector margins start getting challenged. But as a strategy, what we normally do is we keep almost 70 to 80% of our supplies are to the railways. That's how the ordering also takes place in terms of the overall market dynamics. And the rest, 20-30%, is what we allocate our capacity to the private sector.
Sure, but given the fact that in your order book right now, is what is in the execution, I understand that the contribution of private might be higher. Does that mean that in the immediate term, let's say for the next 1 or 2 quarters, the margins will be on the higher side, maybe 11-12%?
In normal, we used to give a EBITDA guidelines of about 8 to 10%, and I mentioned it in the last quarterly call that because of the volumes, because we get the advantage of the fixed cost getting amortized. So we should be able to aim at the higher end of the spectrum, which is around 10%. And then the margin improvement will really take place from the backward integration that we are working on. So basically converting a lot of buy decisions into make decisions. In terms of the quarterly margins being better because of the private sector mix or the railway, the private sector or the railway mix comparison, I would say that these are on a quarter to quarter basis in our industry. A quarter to quarter comparison is really a misnomer. We should look at on a blended basis over 4 to 6 quarters, and there 10%, maybe going up to 11% is something that should be sustainable. Uh, a quarter to quarter, 1% higher or 1% lower really means nothing in our industry.
No, fair enough. It's of course the long-term outlook and the lumpiness as it is in the business continues. But Mr. Chaudhary, appreciate you joining us on the show. At least the visibility for the next few years is quite strong, and that's what the management is hinting at as well.